We've probably all heard of it by now. Sell in May, go away. But does this actually mean anything besides just being a nice rhyme about the markets? I'm not so sure. In fact, I have some very interesting charts to share with you that will show that the markets are actually at a very, very critical phase right now. There's a lot of very interestingly bullish things happening that are not to be ignored right now. First, let's look at this. This chart shows that the last 10 months of price action for Bitcoin in the month of May had basically a 50-50 split of either being bullish or bearish. 5 years had positive price action, 5 years had negative price action. In fact, the May gains in 2019 and 2017 were absolutely massive. It was like 60-70% gains, right? Really big. Selling May would have been a massive mistake. It's tempting to draw some sort of conclusion on the month of May just because, you can do that if you want to, but it's just not that simple. We need a much deeper analysis of macro factors as well as major technical indicators to try and gain some kind of understanding what the heck's going on in the markets. Because May, it's just a month, man. Don't blame May. What really matters is where we are in the cycle and what everything else is kind of saying. Look, maybe this May ends up being a crappy month, right? If you base your analysis solely on historical performance of Bitcoin in any given month, well, then I guess, that's something you can do. Just flip a coin and see what happens. But here are some things that I think are much more relevant. First, of course, is the macro scene. I know we keep talking about, but it's really, really important. And let's begin this part of the conversation off by talking about tech stocks. The NASDAQ 100 is up 26% since the lows of October, which is pretty damn cool because that is the tech-heavy index, right? Some particular stocks like Facebook, aka Meta, are up like 172% since that time. That, by the way, Bitcoin fans, is much bigger than the gains that Bitcoin has put in during that time. We all should have bought damn Meta stocks, not Bitcoin, if we wanted big gains in the last few months. Sorry, guys. The rally in tech stocks has been a pretty clear sign of the increasingly risk-on attitude across all markets right now. Remember, crypto for the most part trades like a proxy for the tech stock area of the market. Another thing to pay attention to, of course, is the earnings reports that have been coming over the last week. A lot of big tech companies have been posting good earnings in the last week or so, easing a lot of fears that people have in the market, letting investors feel a little bit safe in the short term to keep speculating on these riskier ends of the stock market like tech stocks. We even had better than expected results from companies like Deutsche Bank, which somewhat lessens concerns that the US banking crisis is going to have a big impact on Europe. So that's good to see, at least for now, right? The next market moving events to watch for the week, of course, are the Federal Reserve meeting coming up on Wednesday, where it is largely expected that the Fed will announce another 0.25% increase to the interest rates in the USA. Although many also expect this to be the final interest rate increase, which could be, of course, yet another bullish catalyst for the markets. No more interest rate hikes. Let the bulls run, right? Then on Friday, US job numbers will come in, which again, something very important to watch for the markets. If we see these coming in worse than expected, could throw a bit of a monkey into the wrench, so to speak, right? The reason all of this macro stuff matters so much is because it affects the way that the average investor, and yes, even the average hedge fund manager, hedge fund managers are people too, man, how they feel about the markets, right? How the sentiment lines up for the markets. Right now, we're getting enough positive momentum for a risk-on period. How long that lasts, of course, yet to be determined, but getting the period set up. Very interesting stuff we're seeing here. And the specter, of course, of a US recession obviously could still derail markets later this year. So that's definitely something to watch out for. Now, before we talk about the money cycles, the monthly MACD and the weekly close for Bitcoin, all very important things. Just a reminder, if you are a trader, you need to get yourself an account over on BYBIT. It is the best exchange for trading futures on. It has a huge spot altcoin market, a wildly popular copy trading service, and as an exclusive offer for you, sign up using that link in the description and you can be eligible for up to $30,000 in deposit bonuses. Now let's talk about the money. The liquidity Lebowski. This chart from TechDev52 shows something very simple and very interesting. It shows the Chinese 10-year notes and the dollar index, and that when they cross over the 60-week moving average, that this has generally led to a new major market cycle coming in. Not an overnight thing, right? Takes a while, right? And this chart, of course, shows Bitcoin here as well. Notice how significant moves in global liquidity have coincided with major moves for Bitcoin, and really, of course, with everything, right? Again, not overnight stuff, but the start of a new cycle potentially forming up. Hoping, of course, it's not a fake out. Again, the current cycle has been led by China, which marked the bottom for global liquidity back in November. But if more US banks collapse, then the Fed probably gonna have to do the only thing they really can do, which is print more money, of course. Now let's discuss the monthly MACD. Gold in particular. Gold put in a monthly MACD bullish cross in March. Now why are we talking about gold? Well, because the correlation between Bitcoin and gold just hit a 3-year high, showing that, well, yes, the tech sector rally and the strong earnings, they're all bringing a good risk-on attitude back into the markets, that also we could have a second strong narrative forming up here. Bitcoin as a inflation hedge, safe haven asset, escape from currency debasement kind of thing in the face of all this bank failure, something to think about. Bitcoin, by the way, could be about to confirm a bullish MACD crossover in June if May ends up being even a halfway decent month price-wise for markets. The last time we had a bullish MACD crossover on the monthly for Bitcoin was at the start of the mega run back in 2020, and of course before that in mid-2019, which is a pretty impressive rally as well. So it can be a strong signal that markets are building up positive momentum, although fake outs are always possible. Now looking here at the weekly close, Bitcoin has been struggling now for 3 weeks to try and make any kind of meaningful and decisive close over the $30,000 mark. So far, obviously, we have failed to do that. This is a pretty key area of price resistance for Bitcoin at this point, and thus has become quite hard to overcome. The weekly MACD is still in an uptrend though, so that is encouraging to see that we haven't had the bearish cross happen there yet. What I want to see now is a weekly close above the orange line on the chart here, which is basically where $30,000 is, above 30K, right? A good, strong, solid weekly close above 30K is what we need to see right now for Bitcoin. That could set us up for the run to 48K in 2023. Okay, that's it. Thanks for watching. I'll see you next time.